Hey everyone, welcome back to CryptoCache. Thank you very much for joining me here. Happy New Year to you. Obviously, it depends on when you watch this video. It's technically New Year's Eve here in the States, but here in a few hours we'll see some fireworks and the balls drop and all that wonderful stuff. So if you are new to the channel, just know I'm not a financial advisor. Love teaching people to trade. Hope you can learn something here today, of course. We're going to draw out some new Fibonacci retracement levels for Dogecoin, kind of understand what's going to happen next here and see where we're at, because we are actually up on the day, about 3%. We haven't seen that kind of growth in a short amount of time. So again, we want to take a look and see what the probability is of the price going up or down from here. So again, you're new to the channel, best thing to do is register with CryptoCache.tech. Prices are increasing next year, so lock in that rate if possible. Again, I teach you how to become a better trader with trading videos. I also have an amazing community where everyone's learning and growing together. We're all taking some significant profits here recently based on certain signals I'm sending, but also just good trading. We've got some awesome traders here in the community. So again, you want to kind of be part of that, feel free to join up. And obviously too, you want to be part of the best exchange possible and a $10,000 prize pool monthly. CryptoCache.tech again is a site where you can register, but more importantly, use the link in the description for Bitget to register, because then you'll automatically be eligible for that regardless of being part of the community or not, even though that's kind of a community benefit, right? So highly recommend you check that out, of course. Again, link down below for that. And if you are in the States, you will need a VPN. So thankfully, we're partnered with ExpressVPN now. So we got 3 months free with a 12-month plan if you decide you want to use that. Fantastic benefit. Definitely check that out. Again, if in your own time, you need to use a VPN if you're going to be using any leverage trading. But just generally speaking, you want to preserve and maintain your assets, right? You want to have that security, and I think it adds a nice little layer. Okay, so again, something to check out there. And I think actually, if I'm not mistaken, the previous fib levels were right there. We're going to draw them out a little different. In fact, we're going to go with the most recent, so we can get a little bit better price action and kind of see what some immediate short-term targets are going to be looking like. Okay, so again, I basically just drew this out from the most recent high to the most recent low. Okay, so that's simply put how you draw out Fibonacci retracement levels, and people always ask me how often you do this. Well, oftentimes when new highs and new lows are established is when you want to recreate that, and this is definitely a new high versus a new low, so that's why I did that. Okay, these previous resistance and support levels are basically just things you want to recognize, because these are areas in which we will have some resistance as well. They're not foolproof by any stretch, but for the most part, you're going to see some kind of consistency at those areas. So for lack of better terms, right now, we're tentatively above that previous resistance level, which is a positive sign. Okay, so that's good. We want to acknowledge that. We also want to take a look at the moving averages and recognize that we're below all three. So Dogecoin is not in any situation right now where it's phenomenal and a great investment. In truth, it actually is a good investment if you are long-term on this coin, obviously, because it's a very low price point. But what I'm getting at is the fact that the probability of the price continuing lower from here is greater based on the fact that we're below all moving averages. So generally speaking, you want to be above any one of those three to have some kind of positivity. So being back up over the 200, I think, would be a big deal. So again, we got to recognize that we are in a descending trend. Let's go and draw out a little trend line here as well, and kind of just acknowledge that, hey, we are in a situation where the price action is continuing lower, and we want to kind of recognize that we are still diverging bearishly. Okay, so until we break above not only this trend line but also some key level resistances, I wouldn't get super excited just yet. Okay, again, this is just kind of the way that trading works. When it comes to RSI, we can see that we are bouncing tentatively off 30, so this is a positive sign. That does imply that the lowest point for now is in. Okay, and I say for now because last time it came down to 30 and it continued lower, right? Even though it did bounce effectively, this is a common characteristic. We should experience some type of bounce. It still continued to maintain that trend line to the downside, okay? And a lot of times you can see that concurrent with the 20-day simple moving average, which you can see right there, okay? So again, the 20-day SMA would be the first milestone I feel to get above in order to kind of break bullish, at least temporarily, or at least break this descending trend with some sideways momentum, okay? So all in all, not fantastic here. The only silver lining I would say is that we are starting to lose momentum on the MACD, and there's potential for convergence. Okay, we're still a little ways away from that, but that is something that's on the horizon. So that, in conjunction with a bounce off of 30, does imply we could see further upside based on that sentiment alone. So hypothetically, that would be a decent swing trade potential entry, is where the price is at now. But again, that's all hypothetical for the moment. Let's go ahead and take a look at some other things here. Of course, again, we're below the descending trend. Please continue to understand that we haven't broken that yet. But we did have a recent convergence on the MACD roughly 24 hours ago, so that's positive. We're retesting 50 on the RSI, also another positive sign. It hasn't broken through yet, so I would not confirm bullish momentum at all until we break above. And if we take a look at the momentum here, we're at a 7, so it makes sense for the price to kind of stall out where it's at for at least another 12 to 24 hours. So to me, I think the probability of the price going sideways from here is greater than it is to go just straight down or up, right? It makes more sense to consolidate sideways and then naturally work its way above those moving averages and or that resistance level, which right here, 0.38, is telling us we're at about 7.1 cents as a rough estimate, very close approximate. That's essentially what we're looking at. So 7.1 is the tentative resistance level. You can kind of see the price work there as a support. Now it's potential resistance, okay? So just something to kind of be mindful of. So all in all, the 4 hour doesn't look fantastic. This doesn't really give us a lot of indications on what it wants to do, except that it's slightly overextended to the upside and it's rejecting off 50 on the RSI. We break through 50 and we continue to close above 7.1 today. I think that would be a positive sign. That's what we're looking for, closure above 7.1. Taking a look at the 1 hour, take a look at TD sequential, we can see again, once more, we've hit these over-exhaustive states. So again, the price came down to a 9, extremely overextended, comes back over, goes sideways for some time. That's what I'm talking about. A lot of times when you hit a 9, you'll go sideways and consolidate before it legs up and legs down. And in this case, legged up to another 9, and now we're kind of at this slight little reset. And look at how interesting this is though. It comes up to a 9, rejects off of 7.1, comes back down to bounce off this previous resistance level, turn support at 7 cents, okay? So we can disseminate here that 7 to 7.1 is a support channel, and the likelihood of the price breaking higher from here is greater based on that sentiment. But you got to keep in mind we're overextended recently, and it wouldn't make a ton of sense for the price to shoot up from here immediately. Not that it can't happen and it won't happen, but it shouldn't happen if we want it to be a healthy continuation. Again, healthy continuations are not always consistent in cryptocurrency. There's a lot of unhealthy behaviors, and what I just mean by that is it's just one of those scenarios where it shouldn't be doing what it's supposed to do, and it tends to do the opposite of what you expect. Anyways, regardless of that fact, let's take one last look here at the Ichimoku cloud and kind of see. This is a positive sign here, and actually this might be a good confirmation that we are kind of looking for. Because even though the 4 hour isn't great, the daily does tell us we're fairly overextended and that the probability of breaking through that resistance level is higher, right? We have that probability. And of course, we have this lagging span here hanging out. It implies that we have more time for this long position to stay open. Conversion lines above the baseline, we have momentum to the upside. We're above the Ichimoku cloud. And you can see kind of here, right where the Ichimoku cloud is hanging out, that is essentially confirming 7 cents as a support. Okay, so again, long story short here, the 1 hour time frame, albeit overextended, does tell us that we have further room to grow. So to me at this point, that kind of changes things a little bit and tells us that we're probably at like a 65% probability of upside from here. How far upside will it go? Well, that's hard to say. That remains to be seen. Obviously, we don't know, but generally speaking, the most recent highs, such as this level right here at about 7.25, would likely be the next retest. That being said, if you were to set targets, you'd want to set targets just below that level, maybe 7.15, 7.2, to ensure that you get filled and out of the trade by adjusting your stop loss to break even after you've hit your first and second target. That's essentially how I structure my trades. And thankfully, we were able to hit our nice little Solana long overnight. Our leverage position didn't hit. We came really, really close to our target, but our spot trade did. Now, the reason I'm mentioning that is just because of the simple fact that it's important to set targets at realistic areas, right? Those were not lofty targets by any stretch. They were realistic targets with multiple entries, okay? And what I mean by that here is if we take a look right at this point here, we can see again 20 hours right in the range of 2.5% for Solana. And that was a structure there where we actually got in at 9.75 and took profits at 10.2. So again, cool little stuff there that we can kind of do all fully automated through Cornix. I have a referral link down below if you're curious about trying that out. It's a fantastic trading bot. Make sure to check that out. So that's essentially where we're at here at this point. Looking good, all set, fairly good to go here for Dogecoin. A slightly higher statistical probability of the price increasing versus decreasing from here. Okay. Again, tighter profit targets. The only people that are profitable right now are those who are taking profit. It seems so redundant and stupid to say that, but generally speaking, literally, if you are too greedy, you're going to get wrecked in this market because there's a lot of I wouldn't say manipulation, but the prices can only go so high for so long at this point. That not a lot of coins are taking off right now, and you got to celebrate the small stuff and try not to be like, I'm going to set my target at like 11 cents and just set it and forget it. That's all well and good, but the probability of hitting that level again in immediate future is fairly low. Why not take profit between now and then? Right, makes more sense. And again, be cautious with your levels of how much you are trading with. We recommend no more than 5% per trade if you're using leverage, just because the fact that, again, we use cross leverage. You can use isolated if you want, but depending on your isolated type or your cross margin type and what way you're trading, you want to have low position size so you don't get wrecked. Okay, that's just the bottom line. Liquidation is a terrible thing. It's a very real thing, and I try to teach that in my community. So again, check that out in your own time. Thanks so much for joining me here. Hopefully this was a good learning experience. If you want to become a better trader, again, CryptoCache.tech is a site. Link down below. Be sure to register before year end if you want to kind of benefit for locking in your rate. I hope you have a great rest of your day. I look forward to seeing you in the next one. Take care.